Hello guys, welcome to the Economy Hut. Today we will discuss about the topic mutual funds. Now guys, we will see the details of this topic and hope it will be going to a helpful video for you guys. So let's start with it. First of all, we will see the relevance of mutual funds over traditional banking scheme in 21st century. So guys, we would like to ask you, wouldn't it be a nightmare if the company you invested in faces loss and consequently the share price goes down? You will be surely lose a great deal of value. No one is perfect, guys, in predicting which stock would earn stable as well as high dividends. What if you were given an option to invest in a number of stocks at the same time without requiring a huge amount of investments? Guys, it will going to be seems amazing, isn't it so? So guys, this is the exactly what mutual funds does. Now we will see that mutual funds actually a greater option when it comes to earning stable returns. But due to lack of awareness of the benefits, people still rely on traditional options such as bank accounts, bonds for their investments. The option with greater risk offers a greater return. So, this is all about the relevance of mutual funds over traditional banking scheme. Now let's see the next part, and the next part is the what are the traditional investment scheme. Now let's see what a traditional investment scheme. First of all, we will see about the fixed deposit. Now fixed deposit also can be called in short as a FD. Now FD program, sometimes known as a savings account, is a popular and well-known financial options. Now this FD are favored because they are low risk and provide a set but high rate of return and are eligible for deductions up to rupees 1,50,000 under section of 80C of the Income Tax Act. So this is all about the fixed deposit. Now let's come to the requiring deposits. Now requiring deposit is going to be a similar like FDs, means fixed deposits, actually which require an investor to deposit a predetermined sum at a regular intervals over a long period of time. Now we will see the gold, and we all know that gold is a precious metal. Now gold is also another traditional investment option that like buying goods, jewelry, coins or bars is one way to invest in gold. Now guys, it might be quite dangerous as gold prices fluctuate a lot. Now guys, let's see the last one, that is Public Provident Fund. In short, we can call as PPF, which is considered to be one of the most secure investment solution, actually which supported by a government program. Now the 15-year lock-in period makes it deal for a long-term goals, and it's pretty sluggish substance. Now guys, savings plan, national pension scheme, real estate and the stock market are all classic investing possibilities. These schemes have a low risk and hence a low return. An individual cannot profit and increase in the market pricing. Now, lock-in periods reduce investment liquidity even more further. Now, guys, now we're moving towards mutual funds, which is showing a great relevance with in the context of changing market situations and are considered to be a better option in the 21st century. Now, we will see the basic and the simple definitions of mutual funds. Primarily, we will understand what are mutual funds. So, let's see. Now, in basic terms, mutual funds is actually a trust and investment vehicles which collect money from individual and institutional investors that is similar with similar investment intentions and invest it in a variety of alternatives. So this is all about the basic definitions of mutual funds. Now let's see the next part. In the next part, we will see how are mutual funds set up. Now in this part, we will see the setups of mutual funds. Now, asset management companies, that is AMCS, are the apex of pyramid, pooling money from investors for diverse objectives. Now these mutual funds are created when an AMC agrees to distribute its wealth asset to a certain fund with a defined investment goal. So this is about the mutual fund setup, and which is really an important thing, because without a setup it can't run successfully. So this is how they run it successfully. Now let's see the next part. Now in this part, how are mutual funds managed? This is going to be really another important thing in mutual funds. Now we have already know about AMCs, which hires actually a fund manager to oversee the investment possibilities. Now which align with a mutual fund investment strategy. Now this fund manager is going to be an expert and professional in the field of investment. So they can also hire a delegates to look into the investment ideas, which would provide the trust of the unit holders with consistent and reliable income. So this is how they manage these mutual funds. Now let's see the next part. In the next part, we will see what are the ways of earning the mutual funds, and it is the reason why mutual fund scheme is going to be a successful scheme. For how will they earn. Now there are quite some ways through which they can earn through these mutual funds. So we will see this. We will see these ways. Now we have three parts or three ways to earn from this mutual funds, that are dividends and interest are the easiest way to earn money. Now this fund invests the money which receives it stocks and bonds, and the profits they earn are returned to the trust shareholders after a small amount is kept as a fee to cover the fund's expenditure. This is one of the way. And the next way, now the capital or the money can gains are another technique to make money. Now if this value of fund securities rises and the fund sells them, the funds generate in capital gain, which is dispersed to the investors. So this is another way. And the last but the not least ways, that is, the third factor is the rise of asset value. Now, the asset value of the investors increase if the value of the securities in which the funds has invested rises, but is not sold to generate gain. Now, the investors might profit at this moment by trading their mutual funds shares. So these are the three ways of earning from mutual funds. So guys, let's see the next part. Now guys, in the next part we will see the types of mutual funds. Now, what are the basic types? Now basically there are three types. What are they? We'll see. First of all, we will see the equity funds. Now these equity funds are the mutual funds. Few mutual funds in this category are the most frequent. Means in equity funds, these mutual funds are the most frequent. Now only domestic and international funds stocks are invested here in this equity funds, which actually demonstrate the characteristics of a high risk combined with a high reward. Now guys, we already know about the about this proverb that no risk, no pain, no gain. So here is telling about the high risk and high reward. You have to take the high risk to get the high reward. So let's see the next types. Now next is the debt funds. Now in debt mutual funds, in debt securities and money market funds in general. Now these debt funds are less riskier than these equity funds, and so have the lower returns, and that's why they actually have this lower returns. So lower risk and lower returns. So let's see the last types but not the least, hybrid funds. Balanced funds, often as hybrid funds, which are actually a mix of this equity funds and debt funds. Now it invests in both equities and debt, which is characterized by the moderate level of risk and a moderate level of reward. Means it doesn't have a high risk or low risk, it's having a moderate risk, as this hybrid funds are the mix of equity funds and debt funds, and it also reward in a moderate level. So let's see the next part. Now in this part we will see the various alternatives to invest in mutual funds, that is offline investments, and another one is online investment. So first of all we will see the offline investment. Now in case of offline investment, offline mutual funds investing may be done in one or two ways, that is directly with the funds company or through a broker. We must running a bank account that fulfill a correct residence proof, identity proof, and a passport size photograph. Now guys, we will provide an application form to complete and submit together with the above mentioned documentations. Means we have to provide these documentations to complete our applications. Now the sole difference between these two alternatives is the broker's assistance during this transaction. Now this is the only differences. So let's see the next part. In the next part we will see the online investments. Now in online investments we have two alternatives for online investment. What are they? Now the fund's website or an app For the first, we must travel to the official website of the mutual funds we wish to invest in and complete the KYC procedure online, means eKYC. You can also say it as eKYC, and is going to be an online KYC. For that, we must also supply our Aadhaar and PAN numbers. Now guys, we have come to an end of the topic. So guys, if you have any questions related to economics and finances, feel free to ask us through comments, and we will always feel happy and humble to discuss on the topic mentioned by our viewers. So guys, feel free to ask any doubts about economy to us through comments. And thank you guys for listening. Thank you so much. Stay tuned till the next video. Thank you.